Now to a man who told you stocks were poised to surge in May. He was right for a day or so. What does he think now, though? Let's bring in Eric Johnston from Cantor Fitzgerald. Eric, it's good to have you back. Thanks for coming back on.
Thanks, Scott. Appreciate it.
You felt like the man of the hour yesterday. Now you were thrown out of the party today. So what do you see now? What do you make of it?
So I would say a couple of things. So today was, wholesale liquidation across asset classes, across crowded trades that are in the market. As you know, there are a lot of investors, both in equities and outside of equities, that are suffered a lot of pain this year, and they are on their heels. And so when you're on your heels, you have to make decisions that may not be what you think is going to happen, but what your P&L is really telling you that you have to do in terms of de-risking or volatility causing you to de-risk. So today was a sort of classic risk-off, sell every asset. So you had everything from bonds were down sharply. We know stocks were down sharply. Crowded hedge fund longs were hit very hard. The flattener trade that was in bonds went the wrong way. Crypto sold off. And typically, when you see these all-out liquidations across asset classes that are somewhat indiscriminate, that typically comes more towards the end of a short-term of a sell-off rather than the beginning. Because from the beginning, different asset classes are getting hit, people are trading. But when you get this is telling you that it's being driven by P&L and people being stopped out. So today's move, I think, is he kind of increases the sentiment that we were talking about and the sort of investors being on their heels and why we think people are very skittish and it can go the other way, very quickly. The second point that I would make that we learned, sure.
Go ahead. No, you go ahead. I'll let you go. Go ahead.
Okay, so is around the Fed meeting. And I know that there are all sorts of interpretations, people looking at price action and what that's telling you about the Fed. And I think reading too much into the price action kind of goes, a little bit too far. My view is very simple, that we now know that the next Fed meeting is going to be uneventful. They're going to go 50 bips. It's not going to be 25. It's not going to be 75. They're going to go 50 bips next meeting. So you have much more certainty. And the market ultimately likes certainty. And I know it didn't feel like that today, but I think when all the dust settles, the bottom line is that we have a lot more certainty around what the Fed is going to do for the next 2 months. And that's very, very important for markets.
And look, frankly, one of the reasons we wanted to have you on is because on the Twitter feed, people were like, get Johnston back on. We want to hear from him and what he has to say, not only when the sky is full of bright sun, but when it starts pouring outside. And it sounds to me like your level of conviction on your call, which I believe was on Monday, hasn't wavered one bit.
That's correct. So we went bullish, to be very clear. Monday morning, the S&P was 4,100. It rallied 5%, and then it's reverted, and we're now up about 1% since we made the call. This price action today, if you had asked me yesterday, was today going to happen? I would have told you no. The magnitude of today's sell-off was surprising to me. But to be clear, this doesn't decrease my conviction at all, because like I said, this type of action today typically happens towards the bottom. The two times where we've seen bonds or TLT sell off 3% and the S&P sell off more than 3%, one was in our March of 2020, which was basically at the lows, and the other was October of 2008, before we got a sharp short-term rally. And so it's only, a sample set of two, so you can't read too much into it. But I think it goes to something that I've certainly observed over my time, which is this, again, happens towards the tail end. The other thing I would say is that when you look at the catalyst calendar going forward, we know we've got payrolls tomorrow and these Fed speakers. People are nervous about the Fed speakers. And then we have CPI on Wednesday. After that, the catalyst calendar after next Wednesday for the rest of May is very light. Earnings season's over. There's very little macro. And I think that could be a time where you have a dullish market, volatility comes down, and based on positioning, that could allow for this rally that I'm speaking about.
Yeah, a short-term one. Just to be clear, for those who weren't with us the other day, this is not a call that we're ripping back to the highs or anything like that. It was simply a short-term call, maybe 8 to 10%, all happening in May. Just to put a button on that. That's the point we need to make. It's maybe the most important one, too, for those who didn't hear your call just a few days ago.
Sure. Yes, it's exactly right. I think we're in a bear market. we have this broad view. We made it beginning of this year. We were not bullish until 4,100 just 5 days ago. So this is a short-term call, and I do think it's going to happen. Like I said, in the month of May, and then right. We'll see where we go from there.
I appreciate the clarity. I really do. I know our viewers do as well. Eric, thank you. That's Eric Johnston joining us today.
Absolutely.
From
Thanks,
Cantor
Scott.
Fitzgerald. We'll talk to you again soon.